Very good evening to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, I welcome you all in today's 107th CP program organized by AASP of ICI this year. As you all are aware that we have conducted one webinar on CARO 2020. We have covered 6 clauses on 9th of this month. Now this is the second part of this webinar and we are going to cover 7 clauses of CARO 2020. We are having with us Honorable Vice Chairman of Auditing and Assurance Standard Board and Chairman of Audit Quality Center of Audit Quality Directorate, C. Vishal Doshi ji. Namaste, sir. And we are having with us very learned speaker, C. Usav Dogra ji, and very two young and dynamic chartered accountant, C. Prashant Mishra ji and Shan Arya ji. Both are the moderators of today's webinar. So before taking much more time, I request Honorable Vice Chairman of Auditing and Assurance Standard Board for his welcome address. Over to you, sir, please.
Thank you, Anilji, and a very, very good afternoon to all the participants who are present on this second day of the webinar series on CARO 2020. I also extend a warm welcome and a heartfelt thanks to our expert speaker, Utsav Dograji, as well as the moderators, Prashant Mishraji and Shan Aryaji. Friends, at the outset, I would like to compliment Anil Lalji and the entire team for making a century of events. In fact, like he mentioned, it's the 107th event, and that also in a span of 3 months that we have been able to cover during this particular council year. And our objective at the AASB has always been to empower our fraternity friends, our members, with the technical aspects, not only the, I would say, the technical aspects of the various standards, but also the practical aspects and the implementation challenges and how to overcome that through various modes of imparting these learning modules. So like we have these webinar series, a lot of webinars that are being hosted by AASB, as well as a lot of programs in the physical form that are being hosted by various branches of ICI across the country. Friends, the topic under discussion, CARO 2020, and I believe this is the very apt time because in case of the listed companies, as we are all aware, the audits, some of the results have already been announced, some are still to be announced, and the last date, the cutoff date, is 30th of May, that the results or the accounts have to be taken on by the board of directors. And I believe this is a apt time to have a discussion on CARO 2020, which would help all the auditors of the listed companies. Like it was mentioned, we already had the first session where 6 of the clauses were covered with respect to property, plant, equipment, inventory, and others. But more important are the sessions for today, which are on investments, guarantee, security, loans and advance, the default in repayment of loans or other borrowings, compliance with sections 185 and 186 of the Companies Act, acceptance of deposits and related party transactions. I think these are the clauses which are to be covered today by Utsavji. And I believe that, yes, these are some of the clauses which I believe that as auditors, we always focus a lot on things like the inventories and the property, plant, equipment when we talk of the reporting responsibilities. But when it comes to the loans, advances, the guarantees, the securities, the applicability of 185, 186, not so much in the listed companies, but especially in case of the private companies, the non-listed companies, that many times we give it, I would say, a pass, or we do not focus so much on this. Since we have an expert who is going to deliberate on this, I am definitely not going to venture into these clauses in detail or even an oversight. But one thing I would like to share with all of you friends is the seriousness with which we need to carry out our audits, and more important also, I have always said, is the documentation part. And as the saying goes, for all professionals who are into the assurance practice, we have to keep one thing in mind, is that what is not documented is not done, right? So there are a lot of things which we and our team do continuously do and ensure that there are proper compliances with all the laws and regulations with respect to the standards. But there is a gap as far as the documentation of those things is concerned. And I would request you to please ensure that we have come out with a lot of publications as well as tools from the AASB as well as from the CAQ, the Center for Audit Quality Directorate. And I would request each one of you to please go through the respective websites and download these. We have the audit working paper template, we have the standards on audit checklist, which was released by the AASB last year. And I believe this would help you in ensuring that you document all the activities that you are supposed to do and that you have done at a firm level. So, with this, once again, I extend a warm welcome to all the participants, to all the speaker, to the moderators, and I wish you a very, very happy learning. Thank you. Thank you very much.
Thank you so much, sir, for your words of wisdom as well as motivational words. So, with your permission, I would like to start the further
Sure.
proceedings of this webinar, sir. So, now may I request our first moderator, Sri Prashant Mishra ji, please start the proceedings of this webinar. Over to you, Prashant ji, please.
Hi everyone, good afternoon. First of all, I'd like to thank ICAI, WSB, Board of ICAI for giving us the platform, the opportunity to moderate the session. Very, very thank you to all of you to ICAI, sir. And I'm delighted to welcome C. Vishal Doshi, sir, Vice Chairman of WSB of ICAI, CA Anil, sir, CEO of Dogra, sir, who is the presenter of today's session. And as we all know that the CARO clause by clause discussion is going on, and in the first session we have discussed about the CARO reporting of various clauses, that is property, plant and equipment. We have discussed about the inventories, what are the reporting requirements in case of internal audit, what is the reporting requirement to small cash transaction, resolution of the statutory auditor, and the CSR reporting. And we have seen that Sandeep Rodia sir has given his valuable insight in each clauses that we have discussed in that session. And in today's session, we will be discussing some more clauses. We will be discussing about the CARO reporting requirement of investment guarantee security, loans and advances, defaulting repayment of loan and other borrowing. What are the reporting requirements in case of compliances of Section 1, non-compliance Section 185, 186, and the acceptance of deposit and the related party transactions. And in the third session, we will be covering the remaining clauses of CARO 2020 that will be conducted on 16th of this month only. So now I would request my co-moderator Shan Arias to introduce our guest speaker, CA Sarbuga. Over to Shan.
Thank you, CA Prashant Mishra ji, for giving an introduction to our today's topic. I would also like to thank everyone for taking out the time to participate in this webinar. Further, I would like to extend my thanks to the Chairman of AASB, CA Sanjeev Kumar Singhal ji, in absentia, and Vice Chairman ji, CA Vishal Doshi ji, who is present with us here today, for providing me with the opportunity to co-moderate this webinar. Thank you so much. And now I would like to give a brief introduction about our speaker for today, CA Utsav Dogra ji. So Utsav Dogra ji is a practicing fellow member of the ICAI. He qualified in year 2016, and he also has a certification in FAFD from ICAI. Further, he is also a member of the CPA Australia and is a graduate from Delhi University. He holds specialization in audits of subsidiaries of foreign companies established in India, India entry-level strategy, GST advisory and litigation, compliance and litigation in international taxation. Right in the year of his qualification, he had been appointed by CBIC as Master Trainer's Trainer to the IRS and other offices for GST backend and front-end application. He has been invited by various commissionerates of GST and many corporates to deliberate on various topics of GST and in-house corporate trainings. He is invited as a guest faculty to impart training for ICAS prohibition officers and pay and accounts officers of various ministries at the Institute of Government Accounts, Finance, National School of Drama, Ministry of Micro, Small and Medium Enterprises, etc. on various topics. He is regularly invited by ICAI as a guest speaker on the webinars. Also, he was a special invitee to the prestigious GST committee of ICAI for the year 21 to 22 and was also a special invitee to the Student Skill Enrichment Board. And yeah, so that's all about him. And I believe that our audience would be quite eager to dive into today's session. So, without further ado, I'd like to turn things over to our speaker for today, C. Utsav Dograji.
Thank you so much. Thank you, Shan. First of all, I would like to extend my many thanks to the president of AASB board, CA Sanjeev Singhal and the vice president along with us, CA Vishal Doshi ji. And again, good thanks to Anand ji, who always pull me for the sessions one or the other day. And again, both the moderators today, CA Prashant Mishra ji and CA Shan Arya, thank you so much for this warm welcome. So let us start today's session, because I believe that this is a very important topic that we are going to cover today. Should I start with sharing the PPT first, so that we could be building a crescendo along with the PPT?
Yeah, sure.
Allow me a moment to just share the screen. Yeah. So we are discussing about the clauses of CARO today. What is there in my part today for the discussion is a very important clause, which is in relation to the investment guarantees, securities, loans, and advances. Thereafter, we shall be discussing upon default in repayment of loans and other advances and other borrowings. Thereafter, we will be discussing upon two sections of the Companies Act, which would be Section 185, loans to the directors, and Section 186, which are very important, as rightly pointed out by Vice President Saab, that most of the times in the private limited companies, we somehow try to brush this under the carpet, may not be following all the practices that should have been followed as an auditor to report the same in the CARO reports. However, I would like to take you to a little deeper down view on the same, and so that we would be able to actually come up with all the things which are required to be reported in the CARO report itself. Then we will have a small discussion upon the acceptance of deposits. It's not a very long, lengthy portion that we need to discuss. It's a smaller one. Similarly, the related party transactions, I believe all the auditors are quite pro about doing verifying whether the transaction is a related party transaction or not, and whether the same has been disclosed under the financial statements or not. However, CARO holds a special position for the same, so that the compliance can be kept intact. Let us begin our discussion with the investments part. I would like to start from there only. So the reporting of the loans, investment guarantees, securities, and the advances in form of loans. When we talk about this clause under CARO 2020, we need to ensure that only these investments, guarantees, securities, loans, and advances which are given in the nature of loan shall only be covered under this portion of the reporting requirement. These can be secured or these can be unsecured, and these must be given to a company, firm, LLP, partnership, or any other person. In case of loans, advances, and guarantees, securities to an entity, the disclosure requirement would be in two parts. First part would be that of to the subsidiaries, JVs, and associate of the company. The other part would be to the others. That means the people other than the subsidiaries, JVs, and associates. What would be the disclosure that would be required under the CARO? First, that would be the aggregate amount which is outstanding, which has been lent, and second would be the balance that which is outstanding as on the balance sheet date. So these two amounts would be disclosed: one, the aggregate amount of the loan that had been granted, and the balance outstanding as on the balance sheet date, whether it is zero or whether there is a balance in it. Either of the cases, the amount shall be disclosed therein. Whereas the disclosure shall be made in two parts. One part would be that of the subsidiaries, JVs, and associates. The other part would be that of the others. Then, when we come to the second part of this reporting requirement, there would be the terms and condition of the loans and advances that have been granted, which are not prejudiced to the company's interest. They are required to be disclosed in particular. So this is a longer disclosure when it comes to the loans and advances and investment which the company has made. The reporting requirements are a little higher as compared to any other reporting requirement in any point of the CARO right now. So I'll cover it in different sections, different parts. Okay. So the first would be the aggregate amount of loan that which is outstanding, the balance outstanding, that too to the subsidiaries, JVs and associate, and to the others, that too under separate paras. Then the terms and conditions of loans and advances that are granted, that which are not prejudiced to the interest of the company. In case if there is any loans for which there are loan agreement has been made, the auditors are required to verify what are the terms of the loans. In case they find that it is not prejudiced, then in case that disclosure needs to be done here. In particularly the clauses that which they find which is not in the interest of the company. Right. So such clauses needs to be mentioned here. However, if the auditors are also able to find out the financial impact of such terms, then they can also disclose the same, because the last para of the CARO also says the same, that in case the auditor is able to find out any inconsistency, that too that can be quantified, the same must be disclosed under the CARO reports within the specific clause which has been given. When we come to the for the loans and advances, if there is a schedule for repayment for the principal in interest, and we have to disclose whether the schedule has been followed and whether the repayments are there within the time or not. In case there is a default in the repayment, that also needs to be disclosed separately. Like there is a loan which has been given and there is an agreement that has been framed by between the companies, and the payment is not per se given the repayment schedule, or maybe the interest is not being served. In that case, a particular disclosure for the same needs to be made in it. Then in case of the amount which is overdue, so the amount which is overdue for more than 90 days, that needs to be disclosed here separately, right? So in case there is an amount which is due for more than 90 days, the disclosure takes us to the extent where we also need to explain that what steps the company has taken to recover the amount. So if you read the CARO itself, it writes it quite deeply that the reasonable steps that have been taken for the recovery of the principal and interest by the company, they also needs to be disclosed here. So it's a deeper dive into the working of the company that the auditors generally don't take much. So here we have to be very cautious about. We also have to inquire. We also have to retain the working papers around it, because there may be a situation that the 90 days periods of overdue is there, more than 90 days period is there, and we have made a disclosure on to complete a plain disclosure that this much amount is outstanding for more than 90 days, but where we may be also asked as an auditor that you also had to give us the reasonable disclosure on what steps that have been taken by the company, whether you hold a working paper set for the same or not. So please keep it in mind that you also require to keep the working papers with you for the steps the company had taken. They would have sent a legal notice, or they would have sent an email, or they would have had a meeting regarding the same. All of this count for the same, or they would have held a board meeting to discuss upon this matter. So the copy of the board meeting minutes can be held with you, or the copy of the emails or the legal notice that has been sent out, that can be retained with you. So documentation here is also very important from the auditor's perspective. Then loans and advances that fall due, that which have been renewed or extended by granting a fresh loan. Either the loan has been renewed, like the tenure had been completed, but the same had been renewed again for let's say another few number of years, despite of not being served, or it has been extended to another time cycle or a period, or it has been repaid but it has been renewed on the same terms again, and the repayment of and the loan has been granted again, or a fresh loan has been given to repay the previous loan, and the new terms of the new loans are there in the closet now. So in case such kind of a situation is there, that the old loan has not been paid and the new one has been given to check out the old loan, or it has been renewed, or it has been extended, the old loan itself, then the aggregate amount of such loan needs to be disclosed separately, and the percentage of that loan, that renewed loan or that new loan which is given to repay the original loan itself, the percentage of total loans that has been granted by the company, out of that total, how much percentage is this kind of a loan which is renewed, extended, or a fresh loan has been granted to repay the older loan? That percentage has to be separately given. Let's say we have extended loan for 100,000, and out of which, let's say for 100 rupees, the loan had been given only for this particular old loan to repay the same and extend it to a new loan or convert it to a new loan. That which we have been seeing. If we talk practically about it, we see in the case of packing credits a lot, that what they do is that, because packing credit always come with a timeline. So what the bankers do is that they to put it into a cycle of being not an NPA, they give a fresh packing credit to repay the original packing credit loan. However, all these clauses do not apply upon the companies that which are having a business of granting loans only. These are applicable only to those companies which are not in the business of granting loans, like not the NBFC, not the financing companies, not the bankers. So these are all applicable to the other companies. So the percentage of the total loan out of 100,000, this 100 rupees which has been granted for the repayment of the original loan needs to be disclosed separately. So this is a longer disclosure. Then when we come to the loans and advances for which there is no attached term sheet in terms of repayment, or there is no written agreement, or there is no specific terms of repayment are there. So these loans and advances must be repayable on demand without specifying any terms or any repayment period. In such a case, the disclosure would be as that of the total amount and the percentage thereof of the total loan that which has been granted. Again, the same way, like we discussed in case of the renewed loan, out of the total, how much is the renewed portion? Similarly, out of the total loan that has been given, how much is the loan which has been given without specifying a terms of repayment or specifying the terms of the loans, and if they are repayable on demand or not. So a separate disclosure for that also needs to be maintained. Right. And the last one would be the aggregate amount of the loan granted to the promoters and related parties. There would be a complete separate disclosure for the same if there are related parties to the company and an amount of loan that has been specifically granted to them. A separate disclosure shall be made for this. So I guess this covers the complete clause for reporting requirements of the loans, investment guarantees, securities, and advances of the loans. Right.
So, sir, I have a couple of questions.
Yeah. So, would we be doing one thing that we take the questions once I complete a clause, or should we push it to the end altogether?
That will be also fine.
Like, I'm comfortable with both the ways. You can ask me the question right now. Chalo, let's take a question that gives a little spice to the conversation.
So my first question from the para that where you were discussing that we have to auditor have to report the aggregate amount during the year and the balance outstanding for subsidiary, joint venture, and for others. So let's suppose if a company giving a loan to any entity, and entity repaid that loan during the year only. Yeah. So whether we need to disclose that amount also?
Yes. I told you it very clearly that the balance outstanding, whether even if it is zero.
Okay.
In that case also, the same needs to be disclosed, even if the loan has been repaid completely. Similarly, that we also take, in case of a related party disclosure, if you remember, we do take care of the fact that how much is the balance outstanding and how much was the value of the total year's transaction. In the financial statement, even if the value is zero at the end, we disclose the same because this is a disclosure requirement. Disclosures are only made just to let the user of the financial statement to know that what had been the state of the affairs of the company, specifically in terms of the following paras that has been given as a specific consideration in CARO reports. So disclosure would be required, even if the balance outstanding is zero in that case.
Understood. And one more question from the para that is to show the interest of the company. So I mean, I think this is a very simple question, but I haven't told it. Let's suppose if there is a policy of company to giving the loan to the employee at a lower rate. So whether it will be considered a prejudice of the interest of company or should we need to report in the CARO?
No. It would first of all, loans to the employees would not be covered here.
Okay.
This is to the other body corporates only, or the subsidiaries or joint ventures or the investments therein. So, and secondly, that would be, this portion would be covered under the second part of it, the 185 and 186, the second disclosure requirement. And secondly, the section itself says that in case there is a lower rate of interest, they specify how much is, how low it is from the current rate of interest, which is there, billing interest. Right. And in case it is a policy which has been given by the board of directors, or it has been settled as a policy, the disclosure requirement will also not be there. Because that we will see in the section when we will discuss 185, we will discuss 186. You'll get to see that there are exceptions to it. So disclosure requirement for that case will not be there. It is only for the body corporates that we give a loan to, the private limited companies, firms, LLPs, partnership firms, all such things. Right?
Thank you, sir.
So should we move to the next clause?
Sure.
Yeah. So provisions of section 185 and section 186, the loans, guarantees, and securities, where section 185 and 186 are attracted. So let us discuss the section itself. That would be more helpful for us to understand what would be the disclosure requirement in such a case. So section 185 speaks about loans to the directors. So the section completely prohibits any loan to be given to any director, first of all. However, it also gives a cushion comfort when it comes to the loans to the directors. It says that the company can give a loan to a director or a company in which its holding company or any partner or relative of such directors, or any firm in which such director or the relative is a partner, but only with a special resolution that has been passed by the company in the general meeting. Without a SR, no loan can be given. There is a penalty that has been specified, which ranges from 5 lakh to 25 lakh rupees in case a contravention for the same has been done. So this is very simple, that first, the section does not says no company shall give direct or indirect any loans or advances to any director. However, or give any guarantee also in relation to any loan which has been taken by the director of the company, or its or any company which is the holding company of the company in which the director is also a common director, or any partner of or the relative of such director, or any firm in which such director or the relative is also a partner. However, the company may advance loan, including any loan represented by book debt also, or given any guarantee, where a special resolution has been passed by the company, and the loan are utilized by the borrowing company for its principal business activities only. That means the loan has been given directly to either to the director with a special resolution, or to any company in which the director is interested, or to a firm in which they are interested. The loan is utilized only for the principal business activities by that business. Right. And again, I would not discuss this section in very much detail, but I would like to discuss upon what disclosure part out of this section would be there applicable for CARO. So this was just a short review of the section which I have given you. Now, in case a loan has been given in such circumstances to the director or to any company in which directors is directly or indirectly interested, or which his relative is interested, and disclosure as to the amount that which has been given, as to the tenure for the loan if there is any tenure, as to the repayment schedule if there is any repayment schedule attached to it. Similar kind of disclosures which we have already given above for the other companies and subsidiaries and joint ventures, similar kind of disclosure shall be given here as well. Or in case there is a default, let's say the loan has been granted but the SR has not been passed. In that case also, the auditor is required to disclose the same under the CARO reporting. All right?
Sure.
Yeah. Plus, now your question that which you brought to us, that whether if it is a policy of the company to grant the loan and the directors are the whole time directors are on in the employment of the company itself. So in that case, if the company is in the process, or let's say if the company has a condition attached there too, along with holding the director to be its full-time director, if there is a condition to the employment that a loan shall be granted to him, let's say a subsidized loan shall be granted to him, or if it is the policy of the company itself to grant the loan to all its employees, in that case, if the loan has been given to the director, this section does not come to the picture. This is an exception to the section which has been created. So in case if the company's policy, there is a settled policy by the board itself to grant the loan to all the employees, or there was a condition of the employment itself that the loan will be given in case there is a necessity for the director, only in that case, this section will not come into the picture. There would be no requirement of any kind of disclosure under CARO as well. Right? So I guess your doubt on the question
Yes, I think.
is cleared here.
Yeah, clear.
Also, in case if it is in the ordinary course of business for the company to grant the loan, so in that case also it would not be there, like the banking companies, it is ordinary for them. So this section does not come into the picture. In that case, the director is also taking a loan from them, even at a subsidized rate, or a guarantee which has been made on their behalf. So coming to section 186, which talks about loans and investment by the company. So this section prohibits a company to make an investment in a company which is beyond its 2 layers. Like up to 2 layers, you can make an investment, but beyond 2 layers, the investment cannot be made. It is completely prohibited in the section itself. In case there is an investment which has been made up to 3rd layer of the holdings, then in case the disclosure requirement would be there, because this section does not only talks about loans, this also speaks about loans and investment. Similarly, a loan has been granted up to the 2nd layer, then also needs to be disclosed under the CARO itself. However, the section also creates an exception for the same in case it is subsidiary of a foreign company or a company which is incorporated outside India. Right. So in that case, if the investment is being made or a subsidiary of a company having an investment subsidiary for the purpose of meeting the requirements under any law which has been framed in particular, like for a law's sake, we have made a subsidiary that which is going to make a further investment in any other company. These two situations are there where this section does not come into the picture for the purpose of investments under 2-layer schemes. Secondly, this section also prohibits any company to give directly or indirectly any loan to any person or any other body corporate, or to give any guarantee in connection to any loan that which the body corporate or any other person has taken, or acquire by way of subscription, purchase, or otherwise any security of any other body corporate, which is more than 60% of its paid up capital, free reserves, and securities premium, or it's 100% of its free reserves and security premium, whichever is more. So the company cannot grant the loan, make an investment, give a guarantee to the extent the amount is either 60% of the paid up share capital plus free reserves plus securities premium, or higher of these two, 60% of paid up share capital plus free reserves plus securities premium, or 100% of the free reserves and securities premium. In case there is an investment, this is clearly prohibition. This ceiling limit which has been given for making the investment in the other companies, or for granting any loan to any other body corporate or to any other person, or to give a guarantee for a loan up to this value. However, in case there is a requirement to make this kind of an investment, SR needs to be passed for the same. If there is an SR, and in the general meeting, first in the board meeting, the entire board clears the resolution. Then in the SR, if it is a clear majority, only in that case, this kind of a investment can be made. So again, this section creates
unanimous resolution vote.
Okay, again, the section creates an exception for the same. Also, it says that wholly owned subsidiary, joint venture, or the acquisition made by a holding company by way of subscription of purchase or otherwise of its security of a wholly owned company, that will also not be covered here. Like if you are subscribing more shares of the wholly owned company, then again, this exception will not be there. Okay. Again, we coming to the investment part, we also need to take care of one more fact, which is there, that there are a lot of companies which takes loans from the public financial institutions. Right. So in such companies where there are loans to the public financial institutions, the investment, when they go for the investment in the other companies, they are required to take a prior approval from the public financial institutions, but uh, that too only in case where they do not exceed the limit which is given in the section itself, and there is no default in the repayment of the loans. In case they are exceeding the limit, because there is a word used and for the exception of the same. So in case you have a borrowing from a PFI and you are required to make an investment. So in case if the investment is more than the amount given, then again you have to take a approval. In case you are a defaulter in the repayments of the loans, you are required to take an approval. Even in case the amount is not exceeding and you are a defaulter, then again you are also required to take an approval from the PFI. Whereas if you are not a defaulter and the investment is under the limit, you are not supposed to take any approval from the PFIs before making any investment in such a case. Now we come to the disclosure requirement, how the disclosures will be done as per the reporting requirements. So the full particulars will be given in respect of the loans that have been given, in respect of the investment that have been made, in respect to the guarantees which has been given for the loan that has been taken by somebody else, and the purpose which for which it has been given, which is supposed to be utilized for by the recipient of the loan. These needs to be disclosed in the financial statement itself. So now the auditors comes into the picture here, because he has to verify whether the same has been disclosed under the financial statements or not. If not disclosed there, then it has to be disclosed in the CARO report. That this disclosure requirement under 186 was there for the investments that has been made. The same has not been done, therefore the same is being disclosed in the CARO report itself. Right? So I believe this covers the complete 185 and 186. In case there is any question, you are most welcome to put it up.
No, I don't have any questions. Some of your own question you can ask.
And do you have any question? You're not audible. Your mic is off.
Yeah, I don't have any questions for this. Thank you.
All right. Right. So let us move to the next part of it now. Acceptance of deposit. So when it comes to the acceptance of deposits, section 73 to 76 come to the picture of the Companies Act. The RBI directions in relation to the deposits comes into the picture. The deemed to be deposit items comes to the picture, and if there is any order that has been passed by NCLT, CLB, or any tribunal or RBI or any other court, that also comes to the picture. What has to be done? It is very simple as that. In respect of any deposits which the company has accepted, we need to see whether the same is complying with the section 73 to 76, or whether a specific direction has been given in their relation or not. Right. Even if it is a deemed deposit, the same needs to be covered. What do we have to do as auditor? In case there is a deposit, in case there is a direction, we need to disclose the same. The terms of the deposit, that which it has been taken for, and the tenure for the same. Right, and the amount for sure, and the outstanding balance at the end. These all 4 disclosures needs to be made. These 4 disclosures are not specified herein. The same can be made also in the financial, at the back of the financial statement itself, via form of note as well. And in the CARO report, the note can be referred to. Similarly, for the section 185 and 186, in case a note is being given at the end of the financial statements in the notes on accounts, the same can also be referred to there in CARO as well, because what we do practically, I'm telling you the same. In case of deposits also, public deposit have is accepted by the company, they needs to be disclosed here as well. I hope this covers this. It's a very small disclosure, so much of the we don't need to develop on much on this disclosure as well. If you have any question in relation to this, you can ask for it.
Yeah, hi Utsav. I just had one question about this. Like you mentioned about deemed deposits. So like we have some guidance for determining what are the deposits that can be deemed to be deposits, or
the section itself explains, if you read carefully the section 73 to 76, they clearly explains what are termed as deemed
Okay.
deposits. Sometimes there are no specific contracts which are made for the deposits itself.
Okay.
But since they qualify to be not like the security deposit that we have accepted from the vendors, so these are the deposits which are qualifying the nature of which has been given under section 73 through 76.
All right.
Then it becomes a deemed deposit because it is not specifically disclosed as one such.
Okay. Yeah.
So this more of is something which needs to be determined sometime by the auditor itself, whether a particular kind of deposit is falling under the category or not.
Okay, got your point. And just one more question for this, like in smaller companies, we believe that there might be limited deposits, so it would be easier to check.
Yeah.
But in large scale companies, there would be lots of deposits, like the number of deposits. So in that case,
Again, I would tell you the same. Deposit section is very easy to verify.
Okay.
Right. Creditors having debit balances is something which we have been doing since ages. Right. So, unshaken balance from a last year or which has been parked under a specific account or which might be bearing some interest thereon.
Okay.
Would be very easy to identify, even if it's a large corporate or it's a small corporate. From the trial balance itself or from the GL itself, you would be able to spot it out.
Right.
The movement of the funds would normally in the deposits, the movement of funds is not that easy to see.
Okay.
A deposit once taken is kept for a longer period. Right. The portion of interest is only credited. Maybe it can be monthly, it can be semi-annually, it can be quarterly, or it can be annually itself. So it would be easy to identify from the TB or the GL itself.
Okay, got your point.
Yeah. So should we move to the next one?
Sure.
Yeah. Again, this is a very insightful clause that needs to be discussed upon. It's very hard also to determine whether you are a willful defaulter or not. Nobody will say that we are a willful defaulter. However, if they have been disclosed as one by the institutions, then you need to be very cautious about it. So for the auditors, this becomes the gale ki ghanti sometimes, whether to disclose the same as is or not. But I would say again, please be more concerned about whether there is a default in repayment, whether you have seen it completely, whether you have obtained in your working papers all the fresh loans and advances which have been granted, or the older loans which are already there, the CCs and ODs which they have taken, or the bank guarantees which they have already got them made. And you should read the terms of contract, because there are a lot of defaults that they make and they just wipe it under the rug. So you need to be very cautious about it. So yeah, in case where there is a default in the repayment of the loans of the borrowings and interest thereon to any lender, if yes, the period and the amount of the default to be reported in a format which has been given. The format says the nature of the borrowing needs to be written down. The name of the lender has to be written down. This disclosure has to be made lender wise. So for one lender, if there is a default, the other one, if there is a default, you have to break it down to the different. Also, to one lender, if there are more than one loans or advances which have been taken, and out of which only two of them are under default, only two are required to be disclosed. Then the amount paid on the not paid on the due date, that needs to be disclosed, whether it is the principal or the interest amount. So principal and interest needs to be disclosed separately. Out of the total which is outstanding, principal and interest needs to be disclosed separately. Number of days of delay of the amount remaining unpaid, and remarks from the auditor's side, if any, because they may also put a remark what they have discussed with the management regarding this as well. Or if the account has been declared as an NPA, they can put the remark as well that the account has been declared as the NPA itself. Right? So this kind of a tabled disclosure needs to be done in case there is a repayment of loan. Also, whether the company has been declared, the auditee has been declared as the willful defaulter. In case yes, by any bank, public financial institution, or any other lender, that needs to be disclosed. It's very hard for you to find it out. You need to discuss it with the management itself outrightly, because you would be able to see from the trial balance again the repayment of the loan is not being made. And in such a case, if the repayment is not being made periodically, then why the repayment is not being made, then only you would be able to come to the conclusion that whether you are a willful defaulter. Then they will speak out themselves. Yes, we have been disclosed as a willful defaulter, or we have been declared as an NPA. Right. So you need to work a little around the loans and advances corner of the balance sheet. Then whether the term loan which have been taken for a purpose have been utilized for the same purpose or not, whether there is a diversion in the funds. So now this is a tricky part. Many times the loans are being taken for the business purposes and they are being diverted to the plant and properties and investments that they make. So you need to make sure that you see the cash flows, the fund flow statements very carefully, whether the money coming through the loans are being utilized for the purpose of business or the purpose that they have been bought in for, or whether the same is being diluted to some investment or to some other projects which is not in the principal nature of the company itself. Right, because this had been seen in case of most of the scamsters, in case of the most of the willful defaulters, that that they actually tend to divert the fund taken from the banks themselves. So financial institution give them funds for their business needs, but they actually buy lands out of it and they start their infrastructure projects. So this is a very common practice amongst the willful defaulters. The onus has been transferred by this CARO reporting format on the auditors. So we need to be very much cautious about it. We need to really closely examine the end use of the funds that have been borrowed. Again, whether the short-term loan that has been taken, whether it has been used for the long-term purposes. The CC amount is going for the investment in the shares. The CC amount is going for giving bayana of the land and property that you are buying. So you have to be very cautious about it. The CC and ODs are being utilized for such things. From what source they are actually utilizing the money for the investments. So you need to be very much cautious about it, whether the working capital is negative or not. In case there is a working capital negative on a particular day, then you also need to understand that the funds are being diverted. Right. So this is another way how you, as an auditor, how you would be able to see it from inside whether the diversion of fund has been done or not. Then for meeting an obligation of subsidiary, associate, or joint venture, whether the company has taken fund from any other entity. So in that case, like for the subsidiary, if the head office, if the holding company has taken, or for the JV, if the one part of the JV has taken a loan, the terms of such loans and the amount of such loans, they also are required to be disclosed here. Then if the company has raised loan pledging some of its securities which are held in its subsidiaries or joint ventures. So for the holding company, the subsidiary has given their own securities as a as a pledgement. So in that case, if such kind of a loan has been taken and there is a default in repayment of such a loan, then the same is also required to be disclosed here. All right. So this covers the whole requirements of disclosures under this clause in case there is a default in the repayment of the loans and the other borrowings. If you have any questions around it, do ask.
Yeah, so I have one question for this. For example, you mentioned about term loans if they're used for some other purposes. So should we consider the term loans that were, taken in the current year only, or prior year term loans are also
prior year's term loans also? However, term loans are given as a bullet payments only. So you have to check it from that angle only. Normally, term loans, when they are given against the papers of the exact security for which they are being taken for. Like, let's say if the term loan is given from the for buying the land and building. So they would be pledging the land and building against it. If the term loan has been given for plant and machinery, let's say, so the banker would already been having a performer invoice and thereafter the invoices of the plant and machinery. So it's rare to find that the term loan money has been diverted. However, it's very easy to find that the money under CC and ODs have been diverted. A loan which is not earmarked by something, it has been diverted, because bankers are smart enough that they will chase you for your invoices, and they will chase you for the actual machines which have been installed or the actual property that has been bought from the term loan itself. Or in case if it is a working capital term loan, there itself you have to see that in case the WCTL has been taken, whether the same is being used for the purpose of the business only, for buying the stock only,
Okay.
or making the payment to the creditors only, not to the investments.
Alright. Got it. Yeah, I understand your point.
So,
Just one more question that I had
the way I
about
told you that just finding out whether the working capital is negative or not
Okay.
would be one way to find it out very easily. It's a very practical experience that I'm sharing.
Yeah, I need to.
Yeah.
Yeah, thank you for sharing that answer.
Yeah. So I guess reporting in repayment of loans and borrowings, I guess this whole amount, the nature of debt, the name of the lender, the amount that has not been paid on due date, principal, interest, this we already discussed, the number of days of remaining unpaid, and the remarks, if any, that needs to be disclosed in particular.
Okay. About the repayment, I just have
Yeah,
one question, if I may go ahead.
Yeah.
Yeah. So, for the defaults, like sometimes companies might also submit the application to the lenders for rescheduling of loans or restructuring. So, in that case, what do we disclose? Like whether it's
In case the loan has been restructured, I guess that would not be considered as a complete default.
Okay.
Restructuring is a mutual agreement between the lender and the loanee. So I guess that would not be covered here.
All right.
Unless it becomes a complete default.
Yeah, got your point.
In the first year itself, I would say that would be a default, because
Okay.
restructuring does not happen very easily. In the first year itself, I guess if such a situation arises, the first year itself, if the repayment is not being done and the account has been declared as an NPA, the same will be disclosed here. Or you have missed your price, the same will be disclosed here. However, if you have already paid the penal interest and paid the amount, then this would not be disclosed. It would be really harsh to disclose it here. Since we have already paid the penal interest and already made the default good, so that would not be disclosed here.
Yeah, got your point. Thank
It's
you.
more of you have to understand from the core, it's more of the willful defaulting in making the payments, not the accidental skips. Right? Yeah. So coming to the last part, I guess related party transactions. This we all have been veteran about talking about the related party transactions for long. So again, the details in relation to all the related parties that which we have had a relation with, we have transacted them with, needs to be done in detail in the notes to the accounts in the financial statement itself. And again, I would say that if certain transactions with the related parties are there that which have not been disclosed therein, the notes on accounts, you can disclose the same here as well. Also, you need to do the reference of the related party transaction note which has been given in the financial statement itself. You also have to disclose the same here as well. From the reporting point of view, I would say. You have to refer the note number here as well. In case you find there is a reporting requirement of any other transaction that which the company is not disclosing under the financial statements, you can disclose the same over here. What would be the disclosure requirement in that case would be first the name of the party, second would be the relationship with the party, third would be the total amount of transaction with the party, fourth would be the closing balance as on the balance sheet date with the party. So this is a general kind of disclosure that we have been, because Schedule 3 has been amended accordingly for the related party transactions, and it has been given a complete consideration over there as well. You can completely refer to the note has been given in the financial statement. Otherwise, if there is any transaction, you are most welcome to disclose the same over here in the CARO report itself. Also, you have to refer at the same time the note that has been referred at the back in the financial statement itself. Okay. So yeah, I guess this covers the entire series of the reporting requirements around various clauses under CARO. Now I would like to welcome all the questions in relation to the clauses that we have discussed.
Yeah, for this related party clause, I had one question. Like it mentions that we need to check the compliance with sections 177 and 188 of the Companies Act. Do we also need to check the compliance as per Ind AS and AS for related parties?
Yeah, that would also be there.
Okay.
For the Ind AS and AS, the determination of the related party would also be there.
All right.
Because at the outset we prepared the financial statements in compliance with the accounting standards and Ind AS, whichever is applicable.
All right.
So they're always there in the base. We
All right.
cannot bifurcate between them. But the section says this, which are also, if you read both of them, the section and the AS, they are not very far from each other. They are almost the same.
Okay.
Yeah.
Yeah, that clears it up. Thank you.
Any other question?
One more question from section 185. Basically, let's suppose a company has given loan to Mr. A, who is not a director currently, but suppose after 5 months or 6 months he became a director. So, whether any reporting part attract?
Yes, that would be attracted. That would be attracted. But in case in the financial year in which he becomes a director, only then. So the reporting would be required to be done in that case also.
Yeah.
And
Yeah, go ahead.
if you are in clause basically para 3 clause 3, investment in mutual fund, that would be considered as a investment, or whether any reporting fund under the
Yes, that would be considered as a general investment, as we have discussed about the investments also. In case the investment is in compliance with section 186, then needs to be disclosed as well, just like the normal investment as we have been disclosing. In mutual funds or investments in others, they would also be considered.
Yeah, for reporting the defaults under CARO, like, do we need to consider the defaults that occur after the balance sheet date also, but before the audit report date?
Generally, as on the finance, the report are issued on the financial statements which are there as on the balance sheet date itself.
Okay.
However, if the default is of such a nature that it brings to your attention that should be disclosed for the user of the financial statements, the same can be done.
Got it.
But again, it's a very subjective thing. It's very subjective onto the specific circumstances of the situation.
Yeah. Got it. So, like an example, like in which a private company that sells goods to a company in which it is a director. So, in which a director is a related person. So, and the amount is outstanding for more than 6 months. So, whether that would be allowed under the section or not?
Section 188 also covers the similar situation where the common directors are there, and if there is a sale and purchase transaction of any goods and material, that is again a related party transaction.
Okay.
Yeah, so the same would be covered under this related party transaction clause itself.
Right. Okay.
Even if there is no outstanding, the same needs to be disclosed.
Okay.
And again, the default in payment for the transaction of sale and purchase of goods would not be covered under the other clauses of loans and repayments, loans and advances, because that clause is very limited to the loans, investments, advances, guarantees.
Okay.
Not the sale and purchase, but the same transaction of sale and purchase of the goods with the person who, which has a common director or the director has an interest therein would be covered under section 188. So that would be a part of the related party transaction disclosures.
Okay, okay, got
Yeah.
it. And like in defaults, we talk about due dates for principal and interest. For example, like I believe this is a very basic question, but what if the last due date is a public holiday and you're not able to make payment on that day and it's made the next working day? Like banks usually deduct on the next working days. So
In
how
that
do
case, this
you?
this does not come under the default
Okay,
because the bank does not consider it as to be default as well.
got it.
Yeah.
Question, sir. Let's suppose uh, whether advance payment towards the reimbursement of expenses given to director. Whether
I
it
beg
will
your
be
pardon, I
considered
can get you again. Can you repeat the question?
advance payment towards the reimbursement of expenses to the director. Whether that will be considered as loan to director.
No, that is never a loan to the director. Because advancing again, if you go by the clause in the general notion, also it is not an advance which has been given to a director in the shape of a loan. Secondly, giving advance for doing an expenditure for which there would be a reimbursement also. The same is would be covered under the policy of the company. So I told you about an exception of the same. If there is a policy of the company to give such kind of advances, so that the company would also be giving advances to the people who are not the directors as well, for which again there would be a reimbursement of the expenses. So that never comes under the loans.
Okay, thank you.
Yeah. I guess the house is open for the questions. All the viewers are requested to send all your queries and the
Yeah, I'm
questions.
receiving some of those questions, so I will put
Yeah.
them one by one. So recently, a number of CAs have been issued notices for violations of the reporting requirements and everything. So, what do you think that we can do differently to minimize these violations and everything?
Just dig the balance sheets.
Yeah.
Don't let the loose end be there.
Yeah.
Look out for everything that which is possible, and most importantly, I have been repeating it in all my sessions. I have taken a number of sessions with AASB. In every session I keep repeating this thing: please maintain your working papers really well. Please have a good set of the working papers with you in physical as well as in electronic form, as much as possible in physical form and electronic form both. That too coming from the authorized source, that means the company itself. Emails are the best to prove your point. So keep the mail trails, they're saved with you in your folders as your working paper itself. Print the email and keep it a safe copy. Right. So that will help you a lot in case where you have to defend your position. Also, we have to be very much cautious about, because nowadays things are changing very widely. We have to be very much cautious about what FARs are talking about, and how much interactions does the clients have with their banking institutions, and what sort of business they are into, and what sort of fundings that they have taken, and specifically when it comes to the public money, it comes to the PFI's money. We have to be extra cautious about it. Whether there is a CC, a loan, anything to it, we need to look into the terms of the contract which on which it has been taken. Not even that, I would say that in the previous session, I believe that the previous speaker would have covered the specific requirements in case there is a stock statement which is being issued. In case of a CC, the same needs to be checked. Right, the same needs to be obtained by the auditors also. So we need to be extra cautious about it.
Yeah, that's right. You said documentation for everything would be required.
Documentation for everything, and digging the balance sheets is the must. You don't have to take the balance sheets lightly.
Yeah, that's true. Yeah.
Yeah, I'm also getting question from the participant.
Yeah.
So one of the participants has asked, in case of guarantee, GST is also detected now. Do we need to report that in that clause if not compiled?
In case of
guarantee, GST is
what?
also detected now. Do we need to report that too in that clause if not complied?
If not,
Complied.
if the GST is not complied, I guess this section, this complete act is different from what act we are talking. It's Companies Act, and that is GST Act. Also, GST on guarantees would be a part on the lender side, would not be on the receiver side. Right. Okay. Coming from that point of view, if the GST has not been charged on the guarantee commission that which has been charged from you, then again, I would say that the same needs not to be disclosed itself as such. But I guess uh, for the company, I guess there would be no default as such. In case it would be charged by the banker itself on the guarantee commission. I don't think from the company point of view it stands as a question.
So we have another question from the participants. What is the latest turnover limit for CARO audit? So I think that's
This is the basic.
the basic question.
This is 10 CR, I guess.
Yeah. Okay.
1 crore rupees of loans and
Okay.
advances, 10 CR are the paid capital which was there.
Yeah, got it. So, regarding the willful defaults, I had another question. Like, is there any database, like, do the banks or financial institutions
Yes, they
provide
all have the
default?
blacklisted. They all have the database of the blacklisted companies.
Okay,
And the
so
willful
audit can
defaulters.
refer those.
But I do not think that auditor needs to refer to that.
Okay,
That is more specific to the bankers itself.
all
For
right.
willful defaulters, see, as an auditor, you will always analyze the FAR, and when you will analyze the loans and advances part, you would see that there is no movement in case of repayment. The loan is standing intact. The willful defaulter holds the loan for more than a year, about 2-3 years. There is no movement in the loan itself. So you always need to inquire about why there is neither a payment or a repayment, or what is the repayment schedule. In case the question is this simple, in case you get the answer which says that yes, we have not made the payment and we are under an agreement, we are under talks with the bank itself, then again you will get to understand that this particular person is also an NPA. You need to inquire about it.
Okay.
So get to know about it, then you will have to see whether it is a willful default or not, whether the bank has declared them as a willful defaulter or not. Again, you need to ask for the documentation from the client itself.
Documentation will be required.
Yes.
Yeah, got it. Thank you. So another question that we have, for the defaults in repayment of loans and borrowings. So it mentions that the loans and borrowings taken from government are also included. So does that term include the government companies and PSUs as well?
It speaks about the PFIs only.
Okay.
Yeah, it does not speaks about the government of India or the PSUs.
All right. Okay.
Or I can just give me a moment, and I'll just do a deep dive on it.
Yeah.
It speaks about the lender.
Yeah.
Yeah, or any other lender. So that would also be covered into it. In case of a default which is being made to any other lender,
It will be
so
covered with
for the
that.
government of India and the public financial institutions or PSUs, any person which has lent the money, that would be covered into it.
All right. Got it.
Yeah. But this should be in the nature of borrowing only and a loan only. It should not be an advance which has been given and then the things are not happening. So we will say that it was a borrowing in shape of, but that cannot be colored the same way, right? It
Yes.
has to be specific borrowing. It has to be outright. It is said to be a borrowing from them.
All right. Got it.
One more question I have, and it is related to para 3 clause 3. Whether a loan given to a trust in which the director is trustee should be disclosed under this clause.
Yes, it also says about any other parties. Yeah. So you wanted to ask about the related party disclosure or the loans and advances?
No, it is related to para 3 clause 3, investment and guarantee.
Investment, so that covers the portion of any other party also. So if you read it, it talks about company, firm, limited liability partnership, or any other party, if so. So that is also covered in it.
And one of the participant is asking that how to qualify a report when CARO is not applicable.
The question landed the wrong space. However, when CARO is not applicable, you are supposed to give your main audit report. So in the main audit report itself, you can put an exception to it. The main audit report is always qualified. even if there is a default in any of the disclosure requirements as per CARO. CARO is more of a disclosures thing. It is not the qualification thing. The main auditor's report is qualified always. Right. It is not the CARO that which is being qualified. CARO is just the disclosure of all the facts which have been enumerated over here. The 21 clauses, the disclosures are required over here.
I have another questions related to the term loans, like which are used for any other purposes. So the question is like if the
TL that which has been diverted, you mean?
yeah, right.
Okay.
So what if the term loan was temporarily used for some other purpose, but subsequently it has been used for its only original designated purpose? Like for
Okay.
example, usually the companies borrow.
For example, they took a term loan, invested short term
Yeah.
for a small time investment, and then
Yeah.
gained the
Right.
returns, and then again invested it to the original source.
Yeah.
It is not. It is not the way it is being done.
Okay.
It is again would be covered under the diversion of the funds.
Okay, it would be covered.
As an auditor, I would cover this personally under the diversion of fund completely.
All right. Even if it's subsequently used before
Even if it is subsequently used, it is diversion of fund.
Okay.
One more question. It is into section 185, 186. So participant is asking that is LLP considered as body corporate for the purpose section 185 and 186 of the companies?
What?
Is LLP considered as a body corporate for the purpose section 185 and 186?
Yeah. It will be. It will be. That also covers the partnership firms as well. So for the purpose of 185, any partnership company or a LLP in which if the director is interested, that would be covered there as well.
Okay, so I have another question for the term loans. Like, is there any specific criteria what loans, like, is any time period specified what loans would be covered in a term loans or what would be short term?
I beg your pardon?
The term loans, is there any criteria specified in CARO? Like, is there any time limit? Like, if
No, the CARO does not specify any time limit for whether to classify a loan to be a short term or a long term loan.
Okay.
It is the act itself which says if it is repayable more than 12 months, it becomes a long term borrowing. If it is repayable under the period of 12 months, it becomes a short term borrowing.
Okay. But usually, if I tried somewhere in the CARO, like it mentions that term loans are usually more than 3 years, which we need to consider.
I don't think CARO has specifically specified any amount here.
Okay.
For this clause in particular, they have not specified any period for this.
All right.
One more question, that unsecured loan taken by the private limited company from its director and relative of the director, whether this needs to be mentioned in CARO, the loan were taken interest free by the private limited company.
So, any unsecured loan taken by the company?
Any unsecured loan taken by the private company from its director and the relative of the director, whether this needs to be mentioned in the CARO, and that the loan were taken interest free.
Even if the loan were taken interest free. So it will be disclosed under the related party transactions.
Yeah.
Even if bears the interest also. So it will be under section 188 itself. So that'll be a part of it.
Okay. So I have another.
But CARO disclosure, it has a disclosure in CARO.
Okay. One more question, that can a company provide security for the loan taken by LLP, where director of the company is also partner of that?
It can provide as long as it is under the section 185 allows them. Guarantee for a loan can be given, but the provision of section 185 needs to be taken care of. And the disclosure as per CARO again has to be taken care of.
For short-term borrowings, like which are used for long-term purposes, I have a question. Whether the current maturities of long-term debt would be covered under short-term funds?
Current maturities of the short-term debt,
The long-term debt,
current maturity of the long-term debt would be covered under.
the short-term funds that are used for long-term purposes.
No, that would not be.
Okay.
No, that would not be. Because it is already a long, it is actually a disclosure requirement as per Schedule 3. It is already a long-term borrowing, which out of which certain part, which is due in the next 12 months, has been disclosed under the current maturities of the long-term due part. Right. So in nature itself, it is a long-term borrowing. It is not a short-term borrowing.
Yeah,
So
that's
we
right.
should be very clear about the nature of the borrowing itself.
Yeah.
So what the CARO talks about is a short-term borrowing itself, which has been taken as a temporary loan. Like we take a temporary loan, or we take a TL, a temporary TL, for a specific period that would be repaid, which is less than what in most of the cases it is repayable under less than 1 year. Like a packing credit, you can say 90 days packing credit that you have taken. That has been utilized for, let's say, in some investments. So that would be a short term taken for a long term, short term advance taken used for a long term purpose.
All right.
Yeah.
That's clear. Yeah.
One more question from the participant. That, sir, can you please explain again the pack of credit? Pack of credit. What is the pack of credit?
Pack of credit? Packing credit. I believe he's asking what is packing credit.
Packing credit.
Yes. So packing, again, we are diverting from the main concept itself, but I'll tell you what the packing credit is. For let's say you already have an order in your hand, but you do not have money to buy the stocks. Right. So based on the order that which you have, it's a banking terminology that which I'm teaching right now. So it's the short-term credit facility that you would need to buy the. I'm taking it to the simplest example. Let's say you have an order from to export the material out of India, right? But you do not have the money, but you have a confirmed order for the same. There is already a PO which has been given to you. Basis the PO that which has been given to you, or a contract which has been made in favor with you, you reaches the bank and you ask the banker to give you a very short-term loan so that you would be able to buy the let's say the necessary stock, the raw materials, and you would be able to buy the necessary stuff to actually export the items out of India. For the same export, the debtors would be pledged with the bank itself. So what the bankers do is that they give you a credit period to buy the stock and to make the necessary arrangements for making your manufacturing, or even if you are a trader, to buy your stuff so that you could export. Once you export, you also have to submit the LEO, the let export order, that which has been received from the customs to the banker itself, that the particular item has been exported, and once the payment is received from the debtor itself, the same shall be credited. Or sometimes the packing credit terms are different. They do not count upon how long the payment would be received, but for the purpose only for the up to the export, they give you the credit period. So there are different terms in inland also. There are packing credits for the export also. I've taken the simplest example that could be possible for the packing credit.
So in a simple language, can we say that taking a short-term loan, the requirement?
Prashant, your camera stuck. You need to repeat.
So can we say that in a simple language that taking a short-term loan to cater the basically?
Yeah, it is a very short term. It is a very short term advancing. It reaches up to 180 days maximum.
Okay.
Yeah, it can be rotated later on, but most of the bankers, what they do, if you are not repaying the PC money, they open a new PC and repay the older PC with the new PC. So that's that used to be a long practice with the banks itself. When we used to audit a lot of banks, we used to find it all in the banking itself.
Yeah, so I have another question in the chat. This is more related to the related parties guidance. So he's asking if there is an unsecured loan balance to the director of a company and the director expires and the loan is transferred to his daughter as a nominee. So would that also be considered as a related
Yes,
party?
that would be, because related party also includes the relative of the directors.
Okay.
Yeah.
So would that be covered under the relative clause, or whether he's been appointed as his nominee for the director? Like,
So the hire would be the next relative who would be responsible to be given the loan back. So I believe the disclosure would be made accordingly. Whosoever is the hire.
okay.
If there is a specific agreement between the director and the company in which he specifies that the nominee would be the particular person, the daughter of the director, let's say, and they have a written agreement in relation thereto, then the company has to honor it accordingly.
All right.
The daughter would be considered to be the one who is entitled to receive the money back.
Okay. Got it.
Any other question?
Yeah,
All
let
the
me see
questions,
some other
Yeah, but I
questions.
like that there are a lot of questions. That means they found it interesting.
Yeah,
Yeah.
correct.
Yes.
So I'm done with my questions and all participant
Yeah,
questions.
please
So if you have any
keep
questions,
asking. I am more happy when I need to answer the questions because this also gives me a food for thought about various situations that people are thinking of.
Yeah.
so if you have any question, you can ask. I'm not getting any question right now.
Okay, you're not getting any questions. I have a bunch of these.
Okay.
So there's one more question about the term loans guidance. Like, there's a question: is there any difference between the Schedule 3 disclosures, which require the management to disclose borrowings for specific purposes? Like, does Schedule 3 require something else apart from this, which is required to disclose in CARO?
In term when it comes to the borrowings,
Yeah, for the term loans that are used for other purposes. So the management.
no, there is no difference amongst them.
Okay. All right.
I would not count it as a difference because Schedule 3 specifically states tell the instances and the reasons for utilizing the short-term borrowings or diverting the funds. So you can always refer to the note that has been made in the financial statement for the same.
Okay.
However, since it is the auditor's report, I would always say notes on accounts are prepared by the company and it is the auditor's report. So I would always say you should disclose it separately here as well. Instead of just pointing it out, instead of just writing or referring to the note number which has been given by the management, you should specifically write in case there is a situation where you find that there is a short-term fund which has been used for the long-term purposes. You specifically should write it here as well itself.
Okay.
There is no difference as such.
Okay.
That is a separate reporting requirement. This is a separate reporting requirement. So you need to understand it from this point of view. Their
Okay.
reporting requirement as per Schedule 3 is for the management itself.
All right.
Here the reporting requirement is for the auditor itself. So you have to be very strict about it.
Yeah, that's right. Okay, I have one more last question from this. So this is saying whether if we obtain just the MRL in case of the overdrafts and CC limits of a client, would that be enough to check the utilization of funds?
I do not think so.
Okay,
This would not be sufficient.
it could not be.
Just have a small exercise. Just do a small exercise. Just look at the working capital. Just calculate the working capital on the date of investment on the date when the investment is being made in particular, or a day in advance. Just calculate from the trial balance or the FAR if you have for that day, or you can pull it out yourself itself. Just look at the working capital. If the working capital goes negative, it automatically indicates that the borrowing that they have done, they have diverted the same for the investments.
Okay.
Yeah. So there is a clear diversion you would be able to see from there itself.
Yeah, that's
Had the working capital would be there, that means the borrowing which is coming, it is being utilized somewhere else, and the money that we already have in our hand is being utilized for the investments. Right?
Yeah, that's right.
Thus, the MRL would not be sufficient. In
Yeah,
case you are
yeah.
caught, you will be caught red-handed.
Yeah, that's right. Okay, so I have one more question in the chat. Does the payment to a related party before due date done generally made to normal suppliers? I believe it's asking if the normal suppliers are paid on the due date and we make the payment to related party before that. So is that also considered a violation of related party?
No, there is no violation of related party. Related party is a disclosure requirement.
Okay.
It's not a violation that we are talking of here. It's more of a disclosure requirement. In case you transact with your related parties, no matter whether you make the payment in time or not, whatever is the amount outstanding, even if there is no amount outstanding, you are required to disclose the same.
Alright.
The company does not disclose, you disclose it here in the CARO report.
Okay, so like if the payment to related party is before the due date and compared to the other party, so would that require to disclose any bit? Like,
No,
do we need to disclose it?
no.
Oh,
Yeah, what he's trying to ask, I tell you, he's trying to ask that we have kept the other parties on a hold for the payment, and we are making the payments to the related parties first.
yeah, that's right.
Right. So that is more of a trade situation. That is not of a compliance situation. The compliance out of it is only this much, that you have to disclose the same here.
Alright.
You would always be disclosing, again, if it comes to that, I would like to add to the answer that if it comes to that, you always have to disclose the amount which is outstanding to the MSME. You always have to disclose the amount which is outstanding for more than 90 days to the creditors, or more than 180 days. There is a complete disclosure as well for them. Right. So yeah, they would be caught.
Yeah.
Yes, they hold the payments. Now MSME nowadays is becoming a new halavaloo in the market, so you have to be very cautious about it.
Yeah, that's true. Yeah, I think we're done with all the questions.
Any other question that we have, we are open for it. We still have half an hour to cover,
Yeah.
because I guess we covered the disclosure requirements very quickly,
Yeah, we covered those very quickly.
and I guess it was quite in detail so that people
It
could
was
ask
quite
a lot of
in depth.
questions.
So we have one more question. Would preference share capital be considered as borrowings for the purpose of like repayment defaults?
I am still making it in my mind whether how would the preference share capital that you have taken is
Received
a
this
borrowing.
question.
No, it's not.
Yeah.
It's completely not. That is why it is share capital. It's not borrowing.
Any other question, Mr. Prashant or Mr. Shan?
Yeah, I think we have
we have
one more
covered all the
question in the
questions.
chat that I can see. So do we need to report in CARO if there is a difference in the monthly stock statement and quarterly statements like given to the bank?
So this is not my topic for the day, though, but yes, we have to disclose the same.
Alright.
In case you find a major difference between the stock statement given to the bank and the stock that is there in the company, yes, the same needs to be done. I think yesterday it was covered.
Okay.
Yes.
Alright, that is it. Thank you.
Thank you so much, Utsavji, for such a wonderful deliberation. You have covered majorly all the aspects related to the clauses, and it was really today. It was really very interactive, and I hope you have covered approximately 50 questions.
I believe they enjoyed it, and they got a deep dive through. That is why they could come up with a lot of questions.
Yes, yes.
And
No, it is
always it is a pleasure when the audience asks for the questions. It's always a pleasure for the speaker to come up with the answers.
Yes, yes. No, it was really very informative and very one-to-one interaction, and you have covered all the questions. So thank you so much on behalf of WSB of ICI. As you mentioned in the beginning, you always give time to me, and whenever I approach you, you never say no to me.
No, it's
I
always your
remember.
love that brings me again and
Yes,
again
yes.
to the seminar.
Thank you so much. Thank you so much from the core of my heart. Apart from having, maybe I have noticed, apart from having very busy schedule, you always ready for the profession, cause for the profession, and every time you are ready for this, any sort of webinar or VCN is there. So once again, thank you so much for your efforts as well as the knowledge you share with all our members. So thank you so much, Ustavji, and I also thanks both the moderators, Prashantji and Shanji, for sparing your time and wonderfully moderating this webinar, as well as for the wonderfully you have handled question answer session along with the speaker. So thank you so much, all three young members today for this wonderful webinar. Thank you so much. Thank you.
A
So
big
much.
thanks to you too should be there for
Thank you.
conducting all these seminars every time
Thank you. Thank you. Thank
and
you.
inviting us to the dais. Thank you
Thank you
so
so
much,
much.
Prashant. Thank you so much, Khan. You were wonderful. Thank you so much.
Thank you.
Thank you. Good evening.
Thank you so much.
Thank you so much,
So
Ustad ji, like,
Goodbye,
for taking
everyone.
up the time to present this session. Like, it was really informative for me, especially, and the way you handled all the questions, that was really appreciable. Thank you so much, and yeah,
Thank
And
you.
we'll be looking forward to conduct more such sessions with you, sir.
Wonderful. For sure. For sure. I'm always available for the profession.
Thank you.
Thank you so much. Thank you, everyone.
thank you so much.
Okay.